Gary, decent jobs numbers once again. I think the obsession on the street at the moment, not the jobs report, but the tax bill that's going to go through Congress. You said to me only about a month ago that the 20% corporate tax rate was a red line. It doesn't look like a red line now. The president suggested it could go to 22. Is it still a red line?
Well, Jonathan, thanks for having me. Here's what we know. We know that we passed two bills, one in the House and one in the Senate. They both had a 20% corporate tax rate in them. We know we're in conference right now, and the conference between the House and the Senate, they're supposed to conference the differences between the two bills. That's what we know. It sounds like we're at 20%.
So what's the message that you're giving to them, though, Gary? Are you saying that 20% is negotiable now? Because the president's suggesting it is.
Look, Jonathan, we're in the process where we've taken two bills, one by the House, one by the Senate. They've both written their independent bills, and we're trying to bring them together into one bill that will be re-voted on by both the House and the Senate. The committees need to agree on what that final bill is going to look like and what exactly is in there. What they're supposed to do is take their differences and merge them together and agree on the differences. That's the process that's going on. A lot of that is going to happen this weekend. Hopefully by the time we get back to work on Monday, or you get back to work on Monday, we're working all weekend.
Hey, Gary, I work all weekend too. You know that. Come on.
Good. I know that. We'll have a pretty final tax bill here, and we'll know where we're going to be. There are a couple moving parts up in the air, and we've got to get to agreement between both chambers, and we've got to deliver votes in both chambers. And, you know, there's a lot of progress being made.
Gary, I know you're going to get super frustrated with me, but you still haven't answered the question. Is 20% a red line for the White House?
Look, the president talked about 20%. Both bills have 20% in them. That's where we are. That's where the bills are. That's what's in the conference committee, 20% in both bills.
OK, there's a conversation at the moment about expanding the $10,000 property deduction cap to include state income tax deductions. It's said to be on the table. Does the White House support that, Gary?
What I think is on the table is the House is concerned about their SALT members. There's about 70 SALT state members in the House. We are very concerned about them. No one really wants tax increases here. And what they're trying to do is they're trying to say, look, maybe we should expand the $10,000 deduction not to just include real estate taxes, but to also include income taxes. The White House is fine with that. If that's where the conferences go and the conference committee goes, we're fine to support that.
Would you say increasing the corporate rate to accommodate those kind of moves is something you'd welcome?
Look, the conferences are working this out among themselves to come up with a bill that can get support in both the House and the Senate. We've told you that the whole time, that the White House is involved, and we're quite actively involved. But ultimately, the tax bill is written by the House and the Senate, and we've got to get it voted on by both chambers.
Well, Gary, something that popped up in the last week or so, and it moved markets to a certain extent, was people finding out that the AMT rate was still in there. Would you like to see that repealed?
Yeah, look, that's one of the areas where there's a difference between the two bills. That's one of the issues where the conferences are working because there is a difference. We would love to get rid of the AMT rate because we don't want people to do their taxes twice and pay the higher of. One of our core principles was to simplify the tax system. AMT makes the system much more complicated. So, yes, we would love to have a simple system where people can do their taxes, as the president said, on a postcard or a simple sheet of paper. AMT does complicate the system.
Gary, let's talk about the jobs report, shall we? The average jobs report coming in at around 200K today, 228. We've got used to this, but wage growth still disappointing. You have said before that this administration driving some of the payrolls gains. Do you also accept responsibility for the wage growth story as well that isn't improving in the way people want it to?
We do. We accept that. And that's why we need tax reform. We've been saying this consistently, that we need tax reform. We need to allow workers in this country to, keep more of what they earn, but more importantly, we need to be able to drive more wages to our hardworking citizens of this country. And we very firmly believe that tax reform will drive to wage growth. You've seen reports out from the CEA and other people that we believe this tax reform plan will drive real wage growth in this country.
Hey, Gary, I love having you in the position you're in because you really understand financial markets as well. So I can talk to you about what's happening with a 2-10 spread in Treasuries. We're south of 60 basis points. For some people, that's the market casting a vote against your administration and saying, we don't believe you're going to do this. What's your read on the bond market?
Look, I think the bond market right now is a function of a lot of stability in the economy, growth in the economy, lack of wages, as you said, and lack of inflation in the system. Same thing we've been looking at for a relatively long period of time here. We want to break this trend of low wages in the system, and we're confident that we can do that.
So, Gary, as we move away from tax cuts and tax overhaul, once that's completed, do you think we can get infrastructure spending back on the table again? Is that something you want to drive?
Yes, absolutely. As we get into the new year, there's going to be two major initiatives being driven. It's going to be welfare reform and infrastructure. We'll be working on them both together. Our infrastructure plan is quite intricate and quite expansive. The president is really behind the infrastructure plan and is spending a lot of time with us right now to go through the plan and really understand it. And he's driving us quite aggressively to get out there with an aggressive infrastructure plan.
Gary, I hate to ask for a timeline because if we've experienced throughout this year, that timeline for taxes just sort of drifted through 2017. But for you, when do you think that can be accomplished next year?
Look, we're going to start right after the first of the year on infrastructure, and as quickly as we can get it through the process. Infrastructure tends to be a slower process. There's about 6 or 7 committees in the House that have jurisdiction over infrastructure. But the thing that we can do that will have the most impact, and we do control a lot of this, is the approval processes. We need to speed up the approval process for infrastructure. There is money in the system to build infrastructure. We need to get the approvals sped up so that money can be spent.
Hey, Gary, guess what I'm going to ask you next about markets? Bitcoin. Is the White House watching what's happening with Bitcoin? And what are you thinking right now, Gary? Is this a serious risk? Is it something you're worried about?
We're watching it. Of course, we're watching it. Right now, we don't think it's a serious risk, but clearly we're watching.
Is it something you want to act on, though, Gary? The IRS, is it something that they should be looking at? Is it something you think needs to be regulated?
Well, as you know, I think that the CFTC has approved a couple futures contracts. We'll see what effect that has. It will allow people the ability to short it. There's never been a transparent market in Bitcoin. We'll see what goes on here. It's an evolving market. We've watched this happen before as markets have evolved.